Hello, good afternoon, and welcome back to session 4 of this Digit FinTech 2020 virtual conference. We spoke this morning about open banking. It's been mentioned several times. And in this session, we're going to be looking at the progress that's been made over the last couple of years and discussing things like uptake, the impact it's had on consumers, the ongoing challenges with open banking, things like trust, transparency, and obviously future opportunities. Now, this is a panel discussion, so what I'm going to do is ask the panelists themselves, basically, to introduce themselves. So first up, Simon Lyons, who's Head of Ecosystem at Open Banking. Simon, you want to go first? Just take a couple of minutes and introduce yourself.
Thank you very much, Mark. I'm Simon Lyons. I am Head of Ecosystem Engagement at the Open Banking Implementation Entity. I'm lucky enough to have two roles there. My first role is to grow the ecosystem, which is to gain banks and to get fintechs to join it. And the second one, the very exciting one, is to work with industry about awareness. So I have the very fortunate position that I engage with UK government, with large corporates, with people that will consume open banking for their benefit and for the consumer's benefit.
Perfect. Thank you very much for that. And Sorcha, do you want to introduce yourself?
Thank you, Mark. So I'm Sorcha Lorimer. I'm the founder of Trace, and I'm also the Chief Privacy and Risk Officer at the Global Open Finance Centre of Excellence.
Okay, and Hetal?
Good afternoon, everyone. My name is Hetal Popat. I work for HSBC, and I'm the Global Lead for Open Banking.
And finally, James.
Thanks. James Varga. I'm the CEO and founder of DirectID. My journey with open banking and bank data started about 10 years ago, so well before it was something in the market. And excitingly, I've been involved in the journey so far, even chairing the data subgroup for the original open banking working group.
Okay, right. Thank you all for doing that for us. There is an opportunity here, obviously, to ask questions at any stage. You will find the question box at the bottom of your screen, and you can put it in. You can either name it a particular individual, or we can just do it generically to the panel. I'm going to ask a generic question for a start, and probably kick off with you, James, because you were the last one to speak. How widely has open banking been adopted? And, has the uptake been up to your expectations?
Well, I think we're getting there. I think is the short answer. I mean, open banking, when you include both payment services and account information, is a bit of a bad term in a lot of ways, right? Because it's meaning two things, and bank data has been around. We've been using that for a long time, 20 years in one form or another. Payments side of open banking is now just starting to come to market. But OBIE, I think, released some good numbers just the other day, actually, maybe even this morning, around now up to about 160,000 users a month in the UK, 2 million in the last 6 months, of doubling in the last 6 months. And those are all really, really strong numbers. I think if you look at the API calls, again, I think it's something like 400,000 API calls a month right now, if I get those numbers right. Oh, yeah. So we're definitely getting there. Is it a household name? No. Is it ever going to be? I don't think so. People shouldn't need to know what open banking is. They just need these use cases. They need to use it. It needs to be part of people's lives. And I think we're definitely getting there. I think even more exciting for me is we cover 45 countries ourselves as a platform. I think what's most exciting is now what we've started in the UK has become a global trend. 22 countries around the world have launched open banking programs. I can't remember the last time something was started that became such a global trend over just a few years. We're talking, 4 or 5 years since the original HM Treasury sort of working group and activity around that. So, I think we're making solid progress, but there's still a lot of work to do, and it's up to us as industry, us as a fintech. We take a responsibility for this ourselves, is to build use cases with bank data, is find things to create with it and problems to solve.
Simon, what is open banking actually doing for the customers?
Well, your benefits, first of all, I think you've got to set the scene with what open banking is. I think a follow-on with James's point, number one, it's quite a new concept as well. And then when we look at benefits for customers, it's very difficult for us to give a sweeping statement about a benefit for every single person. We've got to be a bit more specific than that. If you look at it in the corporate sense, you have to look in verticals. If you look at it in the retail sense, you have to look for those retail behaviors. I think a very good example of where the benefits are there would be that credit scoring. So if we look traditionally at the way that we lend in banks, I mean, I'm a banker. That's what I did, 25 years at a bank. We scored people in a very traditional way. The underwriters had a method to make sure that people were assessed. Now, that's fine when it's a corporate because the impact isn't as great. When we look at retail people, if we can look at their recent bank history, we get a much more accurate assessment than seeing missed payments, credit file, credit scoring, an anomaly from a CCJ that might be 12 months ago they suffer from. We do have the chance to be able to see much more accuracy. So I use the word inclusion. It's something I'm very, very fond of and very close to the credit union movement. And that's the example I give, that credit unions are using open banking to be able to coach people about their money behaviours and to be able to give them a target of achieving lending or achieving savings. And I think that gives you a very, very solid example of what it's doing for a sector of consumers.
Hetal, do you agree with James? It doesn't really matter if people know the term open banking or not, as long as they use it.
I think so. I mean, the analogy I've used before is, how many of us really know what IMAP is? I think in your audience there may be a reasonable chunk of the audience who don't know what it is. Yet they use it every day because that's the way that our Android or Apple Mail app on your phone talks to Gmail, Yahoo Mail, whatever it is you happen to use. So we somehow get a phone, we set it up and it works with email, and none of us know that there's this technology protocol underneath it which makes it secure. We trust it. We trust there is one. We trust it's secure. We don't really care about it any more than that. So I think open banking is a framework piece of terminology which encompasses the security and trust protocols, which allow us to identify parties behind the scenes and make sure they're operating with appropriate levels of security in place. It includes the data standard and the other artifacts which enable the different entities to talk to each other on behalf of the customer. And I think it includes the rules and the disputes and liability framework which go behind those rules, which enable customer outcomes to be achieved and fixed if they're not. It's an end-to-end piece of shorthand. I think I as a customer don't care. What I care about is when I want to apply for a mortgage relief journey, thanks to the government's recent initiatives, HSBC has made that easy for me by pre-populating as much as it can of that form. Now that happens to be an open banking set of data that we're collecting from your existing bank if it isn't ourselves. It happens to be using a regulated AISP as a partner of ours. And they do a great job for us, by the way. But you don't care about any of that. What you want to do is tell HSBC as your mortgage lender that you've got reasons to have a conversation with us about the product you've got. And making that conversation as easy as possible using this data is what you care about as a customer.
See, I might care about it if something went wrong. I mean, this question's come in from Brian Anderson, Sorcha, basically saying, just wondering what you have seen in terms of how firms are protecting their data assets.
So I suppose the short answer is not enough. Obviously the GDPR, it's been around for a couple of years now, and it was really just the start of a journey towards data protection globally. So there's been huge progress made, but I think the statistics are something like 57% of global UK organisations are complying. So there's massive gaps, and I guess there's no such thing as 100% compliance. So it's definitely a journey, and it needs to be operationalised and maintained. So there's so much more to do, but I am pleased that through the pandemic and recent times that actually privacy has not gone down the agenda. It's probably gone up the agenda. And I think I'm pleased to see it go up the agenda, particularly in the States. So the kind of the consciousness amongst individuals and people about their data, about who owns their data, about that piece that Hetal talked to of trust, I think has gone up. So there's a lot more to do, and there's a lot more that organisations can do. But at least starting with that the right intention is the important thing.
James, do you think customers are aware of the fact that there is greater sharing of information with third parties from their banks?
I guess what do you mean by are they aware? Are they consciously choosing these things because there's an option there, or are they aware of the amount of data that can be shared between people? Yeah.
Well, basically, I think
that's the point.
It's the sheer volume of information that's already out there.
Yeah, I think holistically, people don't realize how much data is, managed by the bureaus and other services. when we started 10 years ago, it was always about putting us as consumers in control of our data, right? And that's why we started as a digital passport service, something that you could put this information together, and as the analogy goes, you could prove you're over 18 without having to share your driver's license, because you shouldn't need to. And a lot of those same foundations around GDPR has been built into open banking in the UK by design. The consent layer, the active consent, the data clusters, the ability to kind of confirm and restrict bits of that data to suit the use case is extremely important. And I've always been a big fan. If you give people choice and there's a reason for them to share their bank statement data, they will. Of course they will. As Hetal mentioned, it's a great example, right? Credit risk is for us, having seen hundreds of use cases over the years, is the one that resonates most, because there's a benefit to the business around credit risk, affordability, AML compliance, in a world where businesses are still being sued almost monthly for not doing what they maybe should be doing. But also there's a benefit to consumers, which is around convenience. And as much as we love to talk about privacy and security and all the rest of it, which are, I'm not belittling that at all. Actually, what motivates consumers is convenience. And if we can take both that control, that privacy, that consent model, and drive it through from convenience, then people will share their data more securely and in a better way than the more traditional world, which is having our data bought and sold, right? I mean, we live in a world that's dominated by bureaus and credit reference agencies in a lot of the world. And those models, for me, are just fundamentally broken, right? And we see that with data breaches and so forth. As a consumer, I'm the one who should have the right to share this data to whoever I want to share it with. And those are the foundations: open banking, open finance, open data initiatives around the world. Do they need to know? Absolutely. Do they care? I don't think so. It took me a long time to come to terms with the fact that as much as I have spent the last 10 years talking about security and privacy and all these other good things, you ask anybody on the street, do you want an identity? And they go, no. You ask anybody on the street, do you care about privacy? Yes. Does it change your behavior? Absolutely no. And we've seen that with Facebook and Cambridge Analytica. I think Facebook numbers changed 1 or 2% from a massive situation, right? So, yeah.
I mean, I take the point of what you're saying about sharing the information. The problem, I suppose, is who am I sharing the information with? How do I know that I'm sharing the information with the person I think I'm sharing it with?
Well, that's all covered in the consent model, right? I mean, that's the explicit consent part of open banking. That's what we designed right from the beginning, is you have to have that active consent. So I, as a consumer, and that's why the industry is regulated, right? That's what consumers should be able to take from the fact that open banking implementation entity and that open banking framework exists in the UK. Is it's a regulated activity, right? So there's things that we can and can't do. That explicit consent is really important. So if I'm asked to share my data with HSBC to apply for a mortgage, then that consent process should describe who I'm sharing what with, and I have the opportunity as a consumer to kind of choose to do that or not do it, right? Not just what information, but the information from which bank account. Unfortunately, Sorcha mentioned the US. There are providers around the world that don't hold true to that. But I think whether it's GDPR or California Privacy Act, there's now, I think, definitely a trend towards adopting a more consumer-centric, consumer-first explicit consent model, which is the world should work.
I'm conscious of the fact, Simon, that we're talking here in terms of individuals rather than corporate clients. Does open banking apply equally to commercial banking clients?
So it's an interesting question. I think you've got to look at it again. You can't take it as an overall view. The corporate client has clients that are in scope for open banking, whereas their bank account at the moment under the CMA order, it covers only up to 7 million turnover. However, I'm sure Hetal could give a view on corporate APIs and that corporate access, but there's two big elements here as well. You've got a trust framework here, and I think trust is a word that is not used enough at the moment. It's about the relationship between buyer and seller. So if we look at some really good examples, and I'll give some, Captain Tom being a perfect one. There was a button on there that said pay by bank, £38.3 million, biggest fundraiser the UK has ever seen. There was a button there that was an open banking driven button. To James's point, which I violently agree with, it didn't say open banking. It just said pay by bank. The consumer was trusting Just Giving, and they were using that service to pay into a corporate's bank account, and that corporate would then distribute the funds back to whence it went, which is Captain Tom. Now, what you had there wasn't one query raised about what's this button. People just used it. So it does demonstrate something really, that is the importance of the trust relationship between the buyer and the seller. Now, that could be the corporate, which in this case is Just Giving, and the donator, which is the buyer. They're actually handing over their money. Now, that is absolutely key to the growth of open banking because it's precedent. And those trusted frameworks, and I know that framework's probably the wrong word to use there, between people are where the corporate will get benefit from open banking. On the backside of the corporate, many years in corporate banking, so I'll explain some of the challenges. Reconciliation in corporate banking isn't real time per se as a rule. It was HSBC that did the first hourly files in PSD1. I remember seeing it, where you did 24-hour files, because all our corporates aren't built to take API real-time transactions. A lot of our fintechs are. They're able to do it. There are very, very few businesses that can apportion in real time. So once again, we have a very large dividing wall, which is driven by behaviors. Even though they're different verticals, there are very similar behaviors. They've got different words around them. The consumer benefits by working with the corporate via open banking. The obvious benefit for the corporate is reduced fees, but there's also speed, there's also certainty of fate, there's also an easy way to interact, tokenization, all the buzzwords and the acronyms we could use, there's a range of them. The corporate to change their process to embrace API banking is a little bit of a bigger game for me. There's a lot more work there to do as well. There's a question in the group, I think, about the commercial benefits. I think the corporates have a great deal of that. Proof in the pudding is in the eating. You've got UK government have just issued a tender for £3 million specifically for enrolled open banking providers. There are more developments to come out of UK government later in the year, which will be groundbreaking in my opinion. I'm working on them, and they will, embrace that and create that market as well. So, do I need to answer say, is there a benefit? No, because our corporates are already telling me that they want to embrace open banking and use it. You could work across utilities, energy, telco, debt collection, backup for failed payments. There's one key thing here for corporates. We just got to look at where the failure points are now. They've been around for a long, long time, these challenges. They're not new. If you and I would have sat at a drink in 2000 and said, in 20 years, Simon, a direct debit's going to take 3 days to collect, and I'm not going to get my card payment for 3 days into my account, probably would have laughed. But that's where we are. So the thing is, there are problems there to solve, and I believe that open banking is addressing a lot of the commercial problems to the benefit of the consumer, which is aligned with the order.
Hetal, you were nodding along with a lot of that.
Yeah, I mean, I bring a perspective to this. I spent nearly 10 years of my life in corporate front office for one of the UK's large banks. So corporate customers are close to my heart, both the upper end of the SME customer base, which is in scope for the CMA order, but also the entire kind of traditional wholesale customer base, which would be inside PSD2, but not the CMA order. Mm-hmm. So I think Simon's explained, I think, very clearly how for a business collecting retail or small business payments, and that could be HMRC in the example he gave, or many, many others, how open banking as an alternative to cards and other payment types is attractive. I think he's made that point pretty clearly. Let's think about data. I want to onboard a new customer. I want to validate that they own a bank account, or I want to validate their address because I'm going to be dispatching someone with that address, or I'm going to be using it as a KYC data point. Use open banking account information as a way to prove address or prove bank account belongs to that individual. Effectively trusting the bank's secure customer authentication process is a reasonable proxy for identity. And that's basically the trade they're making. Well, that's a good one. In most cases, that is risk reducing and cost reducing for all participants, including our customers. So it's a good thing to do. Another very simple example, and you can use that in hundreds of use cases. I think that the third thing to remember is corporates have been using batch file and other ways of connecting bank accounts to other ERP systems for decades. Multinational corporates would have started that journey back in the 70s and 80s, and then that's been working down through mid-market corporates ever since. And SMEs have been using it to some extent in the last 10 years as web-enabled interfaces like Salesforce have made that much easier to do. What open banking does is it completely standardizes those interfaces so even small businesses can use exactly the same services, but using a very common piece of plumbing. So regardless of the open banking rule book and kind of legal framework, you can have a commercial model, which means you can benefit from exactly the same services. And the key thing here is with digital, the more you have a single groove running and use that groove hard, the more stable and consistent the outcomes, because you work all the software defects out of it. In a complex service, there will always be software defects. But if you're, as an end user, if you're using something that's being used at scale by millions of other customers, there are very, very few defects, and therefore you get a very high quality, very resilient experience, which is what you ultimately care about. So open banking will benefit corporates just as much as it benefits consumers, even if they end up putting contracts and all the stuff over the top of it.
What's the right thing to do here, Sorcha? You know, if James is correct, and I'm sure he is, that people really don't care what open banking is, particularly as long as it works. It's the right thing to do to say to them, look, this is something different, but it's safe. I've just changed the button on the screen and let them carry on using it. It's ignorant and bliss.
There's a question in the chat about, you know, the risk of people oversharing data, and I think, you know, you have to. There's so much more to be done in terms of educating people understanding of what's happening with their data, and people understanding of the GDPR, as we talked about, privacy by design of open banking. And so, yes, people don't necessarily care about these terms, but maybe we need to find better ways of describing them rather than say, well, okay, the terms don't necessarily work. Say, you know, sort of try and break some of these terms down. So the GDPR is an acronym, you know, people got completely tired of that acronym, but so let's move towards privacy by design, or let's talk about, you know, sort of being a good data custodian. Let's find better terminology, because I think in our industry we just overuse acronyms, or we use some, you know, sometimes very kind of difficult and impenetrable terms. So I think there is a responsibility to explain again, and keep explaining, and that's really key for transparency. So you asked, Mark, what's the right thing to do? I think the right thing to do is to keep evaluating that and asking that question. So being transparent as possible doesn't mean that you have a long terms and condition that says a long privacy policy that sort of explains every kind of data point and everything that you're doing. It's actually being transparent, is making sure that that information is conveyed in a way that's not kind of full of legalese, but it's actually digestible. So there's lots of different ways of doing that, and I think it's about kind of checking that in and then evaluating back with the consumer, say, what do you take that from that? What does that mean to you?
Yeah, it's interesting, James, that March the 23rd, I would say that within 2 or 3 weeks, an awful lot of big companies, the BBC was amongst them, suddenly discovered an appetite for change in technology, which had hitherto been somewhat hidden. I mean, folk were desperate for solutions, desperate for, you know, to make things happen, you know, and in the space of more or less a glorified fortnight, they made changes that might have taken 2 or 3 years otherwise. But something like open banking, has the pandemic actually rocket fueled it as well?
I think so. I mean, certainly we've seen a fundamental shift in the business in the last sort of 6 months. I mean, we've doubled customers, we've doubled revenue. You know, change in financial services, adopting innovation is a huge challenge, you know, not just for the tier 1 banks and the big ones, but across the board. It always has been, it always will be. Financial services is kind of risk adverse by design. It's there to manage risk, right? So, you know, you just have to appreciate that. But I think we live in a world where now you can't always rely on what you've always done, right? Because the world has changed so much, and that catalyst has come from the pandemic. For us, we've seen a huge shift. So I completely agree with Hetal. Credit risk, absolutely one of the best use cases out there. But it hasn't just been in the onboarding origination for us. It's been right through the full credit risk life cycle. It's been into portfolio management through to collections to recoveries, right? The whole gamut, because there is a common thread around credit risk, affordability, verifying someone's income that is extremely hard to do in a sort of digital context, you know? I think when you then combine that with the sort of industry norm of relying on credit reference agencies and bureaus, which are fantastic data sources, but historic, again, by design, right? They're always going to be 6, 12, 24 months old because they're based on what I've done in the past, not what I'm doing today. You combine all that stuff together, and what options are there? I've just been involved in a FCA data sandbox project. We looked at, you talk about corporate bank accounts as an example. We looked at every data source for SME lending, and the only one that made a fundamental difference was open banking. Because is coming directly from the bank, so you can rely on it to make a decision, but also that is real time, right? Then you combine open banking as a global trend. You think about thin credit files, new to countries, people that are stuck here or doing their financial inclusion, financial wellness. The list goes on, and certainly there's huge opportunities from that whole credit risk thing all the way down to how do you validate someone's bank account if you're not actually processing bits of paper. So I think if over the years, like I said, I've been talking about the same thing for 10 years. The first 8 years I was left out of rooms still, right? Even a few years ago, still being left out of rooms with people saying this will never work, consumers will never share their data, right? Into a world now that's been I don't know, kicked into action because of the pandemic, because you just can't always do what you've always done, which is fantastic to see. Where it's just yet GDPR was there a few years ago. That kind of helped clarify who should be sharing data with who and how much control consumers should have in it. Before then, there was still lots of pushback of big corporates going, no, this is our data, not the consumers. And you go, no, it's my name, address, and date of birth. It should be mine. That's my data. Through to now, the pandemic, which is completely changed the expectation because there isn't a choice.
Any thoughts on that, the rest of you?
I've got a perspective, which is the other thing that's driven consumer change is mobile first. As we've all got used to living our lives on these little pieces of real estate, inputting of data becomes a major irritant and a major obstacle to actually then doing the things we're trying to do. So I think customer appetite to find ways to pre-populate, whether it's using keychain and similar services that are made available by the manufacturers, or using open banking, or in Canada, they've got an increasingly well-adopted identity solution that allows institutions to share data authorized by customers. We're seeing digital identity in other markets as well, enabling the sharing of authenticated data. So that as a global trend is going to happen, and open banking, I think, kind of twins with that very nicely. And I think the other bit that happens naturally is that people are already using third-party services to authenticate other third-party services. So many of us will use, as an example, in my family, we use PayPal to log into Ocado. Why? It just avoids having one more password to remember. Many of us use Google and Apple and other identity services to log into other services, and we know they share data in the background. We perhaps don't think about it hard enough, but we do that, and we're used to that as a journey. So open banking, using app-based journeys, is playing into a behavior that customers now understand, where perhaps even 3 years ago they wouldn't have. And that's how fast technology changes our behavior.
Can I add something? I mean, we use Morrison's down where we are, Hetal. We know we're wealthy enough for Ocado. Obviously, that's way too expensive for us. There's one thing I feel we're really missing. It's sort of the philosophical of about it. Open banking, its first uses were aggregation. So the first really simple uses were, can I see on my bank accounts as well? But actually, the bigger picture is we can now aggregate our banking. It's the last bastion that wasn't accessible. Now, it was to big corporates. You could get SWIFT, and you could get messages out, and you could exchange them in your treasury management system, and you could do all sorts of things. But now, actually, you can put that banking data next to something else. And Hetal's just given a perfect example with Ocado, which even though you're using a financial instrument to log into a retail instrument, if you extrapolate that going much further as well, you can bring much more data from other sources. So, for instance, the small business market, as a banker, I hope Hetal would agree with me, the biggest challenge they have is cash flow, right? Building a cash flow is absolutely the most manual thing. You can prove that by going on YouTube, searching cash flow, and you will find a video of Excel with 6 million users. Right, and I know there's some wonderful solutions out there, Fluidly and Float, that things that go and do it. So now what you can do is exactly as James said. We draw the bank data, we bring the purchase ledger data, we bring the sales ledger data, and maybe we've got some cash at hand data because we're that kind of business, or we've got a supplier that's got with us an agreement to pay. And before we know it, to keep our financial lives turning over, we've aggregated all that data. Then we can confirm who it is, so if there's any lending, they can get paid. But now let's change the words and do that in a benefits assessment case. So we can look at somebody's personal spending, we can look at their bank account history, we can see what they're going to be owed in terms of benefits, we can attest them and identify them as part of the process. We've just taken out a lot of pain points in a process. That could be a passport, it could be a universal credit claim, it could be a claim for a grant for electric vehicle charging points this week, it could be one of a number of things we're applying for. So what we've got is, the first use was actually so ironic in that it was aggregation. And then the bigger use cases are, it's not payments and bank accounts anymore. They're together. And the power of those together applies to so many different behaviors across so many things in our day-to-day lives. Yes, there's the challenges of data. And, I'm a firm believer that we should have some kind of mandated law to make T's and C's easier. There is a thing, I think, called the Simple Law Project, where there's small icons where they give single line T's and C's. I'm a huge advocate of that because I used to run a TPP and we got 97% of people click them, even though we had a spelling mistake on line 1 and, nobody spotted it. But if we get over that, and it is a hurdle, it's a pothole, and it's a big one as well, we've got the chance to bring so much together to improve lives. The transactional and functional behavior is the same. The vertical needs are very, very similar. I hope that's welcome.
Sorcha?
Yeah, I'm pleased to have the point echoed on the terms and conditions. It's a huge passion of mine. I think what you're talking to is phenomenally important there, Simon. I think it's actually, and everything in this conversation today is driving towards, let's make it easy for people. We don't need to put more barriers and more friction in people's way at the moment. 2020 is tough enough, right? And there is this kind of old adage that governance and security will add friction, and it continues to do so. But let's work towards a future where we reduce those friction points. Yeah. So that they don't become exclusive, because actually that means it's a bad user solution if they are exclusive. And so in order to achieve that, in large organizations, they need to be a lot more joined up behind the scenes. You're having sort of your information security teams, your risk teams, and your brand teams all separated. And what we're saying here is all these things are inherently connected because it drives a better solution for the end user. So we have to make it easy. We have to make it easy to understand, easy to engage with, and easy to stop the processing. That concept that you're talking about, James. Actually, if it is your data, actually I don't want to do this anymore. So make that kind of opt-out, and that all lends itself to greater self-service, which is going to deliver greater efficiencies for the companies too. So,
great.
Coming back to
I think just to kind of build on that even a little bit further, I mean, there's a lesson here that we're learning in open banking, is that if you understand what motivates consumers, you can get them to do the right thing, right? Convenience is a strong motivator, right? As an industry, we just need to use convenience as the call to action, as the catalyst to get people to connect their data more securely than using more insecure methods, right? But it's understanding that behavior that, when we talk about identity and security and stuff for the last 10, 15 years, that's been lost as part of the conversation. We've always focused, to your point, Sorcha, on the liability model and other things, and not on the consumer behavior, because it is a behavioral challenge.
Mm.
Here's a question in from Graham Muir from Max Touch Services saying, for lenders, open banking shows a consumer warts and all. You can't unsee what you see. What is panel's view on how lenders can future-proof their affordability models when they've been faced with making decisions on a customer's spending habits, such as gambling habits, brackets, how much is too much, frivolous spending on luxury goods, where before this was unseen on the traditional credit bureau decisioning? Who wants to pick that one up? Well, nobody, I suspect, but somebody's got to.
No, Mark, I'm happy to say that as someone from the bank side. Look, it's I don't think lenders set out to apply morals and kind of their values onto their credit policy. I don't think that's an appropriate way for firms to behave. It's all, when you lend, it's on the basis of affordability for the customer and ensuring the right outcome, which is that people who are creditworthy, by whatever standard that institution operates, get access to credit. And equally, customers who are not creditworthy don't get put in a position where they have credit and then fall into distress, because that's a bad outcome. So, and that's a really bad outcome. And I think the key point, and James, I think, made this point really clearly, the key point is that open banking, real-time data, gives you real-time information on a customer's position, which avoids, particularly at the moment, the bad outcome of lending to people who perhaps are trying to pay off another outstanding, but then find themselves falling into a debt spiral. That doesn't do anyone any good. Clearly, it's not good for the lender because there's a risk of impairment, but it creates incredible distress and mental health issues for borrowers as they fall into distress. We know that. And as responsible lending is therefore a regulatory obligation on all lenders in the UK for the right reason, to protect consumers, businesses, whoever the counterparty is. So this isn't really about too much data and you can start to draw normative judgments. This is data so you can understand trends. If somebody has recently started to increase their spending profile and their cash flow is showing a swing towards something, it doesn't matter whether it's a nefarious thing in some people's eyes like drink or gambling, or if it's something that's entirely benign like healthcare costs. It's still an important matter to understand the affordability of that loan. I'm not trying to draw judgment on that as a lender. We shouldn't be. But we should be trying to say, can this customer reasonably repay this facility? That should be the core question. And I think more data can only help you make good judgments on that. Obviously, in the background, one has to consider, are there hidden biases in there? Do we have discrimination against women or minorities of some sort within our algorithms? That's clearly something as we use machines more, we have to learn about and investigate. But I think that's a much bigger problem for society.
Another question here from Richard Gray, Free Agent Central. Is open banking, I take this as something as a moral victory that we've managed to get to this time of the day without mentioning Brexit, but this is where it stops. Is open banking going to stop when EIDAS certificates are revoked on the 31st of December as the UK leaves the EU transition period? Is there going to be enough time for the FCA to confirm an agreed way forwards and for TPPs and ASPs, SPs to implement, or do we just not check certificate revocation in the meantime? I have to say that wins the award for the most acronyms too. Well done. You're shaking your head, Hetal.
Yeah, and clearly something that we and other firms are very worried about. I was on an FCA roundtable with the OBIE as well. All of our governmental counterparties are pulling together closely on this. It's a known thing to fix for, with the onshoring of the regulatory technical standards. Another bunch of acronyms there for you. The FCA have put a proposal out there that the industry is consulting back on and responding to. There are some things that we need to address within that. Overall, the shape is very good. They are being very responsive. I do not see this as a reason for there to be a cliff edge. Given where we are right now, that'd be a surprisingly poor end to the story. I think we're going to collaborate, government and industry, to make sure we make this a smooth transition for everybody.
Okay, I would just like to sort of finish on crystal ball gazing to a certain extent, looking forward, trying to see what the positives might be in the future. Sorcha, you want to sort of speculate just for a minute or so, and I'll just go round the houses basically and get everybody's thoughts on this.
Well, I at the start I talked about, harking back to GDPR, and I saw, May 2018 as a starting point and the way that we have to go. I would say that where we are with privacy, open banking, and generate kind of consent frameworks, again, we're very, very early days, and I feel hugely positive that we're getting this kind of much bigger agenda that's diving up here, and this greater consciousness that I'm talking about. So I suppose crystal ball gazing, anyone who works in this industry should take a very long-termist view. 2020 has been an unusual year, and I think there'll be huge positives from it. It's certainly hit the accelerator in terms of digital transformation, end user adoption of technology and change of habits. So a huge optimism, and certainly when it comes back to privacy by design, the agenda is just starting. And I'm also pleased to see a kind of greater consciousness of thinking about technology, of AI, of data in much more human terms of how do we humanize all of the technology and the solutions that we're building today. So that's my piece.
Okay, Simon, same from you.
I think we are in the age of aggregation. I think you can apply what we've done as open banking to many other industries, but I think the most important step that's not often talked about is this, and it's the word standards. If anybody that I know that Hetal, James and Sorcha will all have looked at regulation over the years, I'm sure FATCA and PSR1 and PSD1, they were not prescribed, whereas what we've actually got is we've got a set of standards to adhere to. Now, it's not a minimum point, it's a viable proposition point for me as well, and I believe that what that's done is given us the chance that when we do engage with other industries as more aggregation takes place, we're going to say to our suppliers and people in the market to engage, well, here's what you've got to achieve, here's a standard we know that will work to satisfy a lot of the needs, and that stops one word, which is interpretation. So if you looked at things like BACS EDR, sorry to use an acronym being introduced, it was introduced 20 different ways by 20 different banks. What we've got with standards is, with open banking standards, is we're saying to people, connect this way. And then what you can do is everybody can get the benefit. It's easier to join the club. It's easier to bring more people into the tail. Now then, if we put that across maybe energy, across finance, across motor, across insurance, across electric vehicle charging points, it's much easier for us to bring all these industries together for one solution. So to Hetal's point before about using the PayPal ID to log on, what you may well be able to do is to prove a lot of attestation along the way to prove what the people are. And that helps us in things like lending, in gaining products, in gaining benefits. It's all about the joined up economy, the joined up economy of the services we use. And you can only do that when you have a standard. On an open banking front, I'm a very privileged person in the viewpoint that I have and what I see as well. 2020 has been the mindset to embed it and to sort of get us to the point where people are engaging with digital solutions because of the tragedy of COVID. There's no two ways about that. It is a tragedy, but there's been some positives where I sit. I think that 2021, you'll see a lot more services where our underwriting will change, but not all of it, just the end of it. You can't change the whole underwriting model. You'll see where our identification of benefits, not all of it, they'll just add a richness to it. The bit where we sign up for parking, where Ringo, if anybody's used it, is quite a cumbersome process. Maybe there's a way of transferring that identity because it's low risk. I think we're about to see an enormous change in the way that we bank in our day-to-day lives for identity, banking, payments, and data all together. And I think that the open banking standards have been quite a large catalyst to that.
Good. Hetal.
Yeah, I think if you step back, there's kind of three secular trends that all come together, and this is just going to feed off that. Number one, customers are driving ever more digitally. COVID has accelerated that, as we've seen with e-commerce and other changes being accelerated, but it was happening anyway. Secondly, government in the UK and in other key markets is driving for exposure of customer data so the customers can benefit from it. That's happening in many, many markets, and it's picking up momentum. And thirdly, corporates are seeking increasingly to take costs out of their journeys, given incredible pressures at the moment on them. And therefore, anything that allows straight-through processing and simplification, reduction of operational risk is attractive to corporates as well. Those three all drive you towards customer-authenticated sharing of data for a myriad of use cases. And the thing about open banking that perhaps we all got wrong at the start was everyone thought it was about aggregation in terms of PFM, personal financial management products. That's turned out to be true. The answer is there are millions of use cases, and we all have different ones that we need, but they can all be fulfilled.
Yep.
And a very different view to the idea of there's being a killer app like email, which made the internet grow. And so what we're seeing is all these key secular trends will just drive this, and it's happening by itself now. Regulation started it, but industry is picking up the flywheel and driving it because there's opportunities to benefit firms as well as our customers.
I once at a conference years ago where I took in a school bell, and I warned the participants beforehand that if anyone used an acronym without explaining what it meant, I would ring the bell. Today I'd have a very sore arm. James, you could just round this off for us, please.
Sure. So first of all, I think we should talk about open banking data and open banking payments maybe separately. I think we kind of throw those things together. But for me, the reason why I've always been so passionate about this topic is fundamentally financial services is a global trust network, right? That knows people are who they say they are, that has a fantastic amount of value and wealth in that information, and represents an opportunity to solve this sort of identity challenge globally, right? I think that's one of the future things I think that we could really start to work on. The other one is a foundation, as we've all talked about, towards more and more of individuals' data being accessible by that individual. So moving from open banking to open finance to open data, and pushing forward that agenda to flip the organizational model where we all try to manage people's information to a consumer-centric one where we empower people to manage their own data. Fundamentally, the only way that we're ever going to solve this problem is to put people at the middle of the conversation. So if we can combine that value of open banking with a consumer centricity of people being responsible, having ownership of their own data, and that global trust network that exists in financial services, I think we have a chance to do something and solve a pain that hasn't been solved in the last 15 or 20 years.
Thank you all very much for your contribution this afternoon, and your thoughts and years of experience being brought to bear on these questions. So James, Sorcha, Hetal, and Simon, thank you again. Cheers.
Thanks, Mark. Thank you.
Right, there's going to be another 15-minute break now, and we are going to come back to the final session of this conference. So join us then if you can. Thank you.